Hey guys, it's Max. How's everyone doing today? I appreciate you guys for being here. This is a little unscheduled live stream. I just felt like getting this out of the way, getting this done. But let's see, it's about 4:30. Market's been closed about an hour and a half. Okay, let's look at the buffer report and the call spread report. Let's look at YieldMax, Defiance. We'll look at some charts. And we'll talk about we'll also probably talk about Max's volatility metrics and see what that's up to. Okay, well, here's the index buffer report. So we had a lot of good performance in index land. Look at this, SPY-T almost getting all the upside, but not as much as iSpy. iSpy is really killing it. So is ZIVB. Why did I not have T-SPY on here? I need to have T-SPY on here. Gosh darn it. Did you guys watch my new video that just came out today? It was with Sai Katara, who is the CEO from T-SPY. T-SPY was on my old buffer report. It didn't make it to this one. I need to put it on this one immediately. Did you guys just the too long don't read? You should go listen to the interview. But the too long don't read is he decided to bump the dividend payment from 6 to 8 all the way up to where it sits around 14 because he wanted to make it more attractive from a yield standpoint. So I bet a lot of you guys would like that, but it's still pretty attractive from a total return standpoint. And right now it's curb stomping the SPY. It's beating the SPY. So it's only been around a month and a half, but it's doing well, doing really well. I'll make sure it's back on here tomorrow. I'm sorry it's not on here. But since let's see how it did today. It was up 74 bips. SPY was up 60 bips. So that's pretty good. 74 to 60. So let's look back. Let's look back here. It beat iSpy. It beat everything. It beats, there's nothing that was up 74 bips today. Hey, Sai, I'm sorry I don't have it on here if you're watching. It used to be on the old buffer report. I made a new one and it didn't get copied over. I'll fix it ASAP. If it wasn't live, if I was recording this, I would go fix it now. But it's fine. All right, well, let's see what else did well. So NASDAQ really didn't have as good of a day today. NASDAQ was only up 15 basis points. So some of the NASDAQ-based funds like AIPI and QQY outperformed easily, as did KQQQ. YieldMax looks really good today. YieldMax undoubtedly has got some of this BETO, some of this some of this YBIT action is undoubtedly why it's up so much, but it's doing really well, which is good to see. The other YieldMax one, or the other NASDAQ based are holding their own. Look, the Goldman Sachs fund GPIQ outperformed its parent asset. QQI is tied with its parent asset. JEPQ outperformed its parent asset. So great job all the way around. Now let's look over here in Russell land. Now, great job ULTY. Killing it today and outperforming the Russell, which is what I'm calling its parent asset. It's not really its parent, but it's close enough. Okay. So there's GPIX. That's in the wrong place. That's an S&P based fund. My apologies. All right. IWMY did not have a great day compared to ULTY for sure, or IWMI. IWMI looked really good today, as did RYLD. Nice job. IVVW kind of lagging. Bally, Clip. Well, Clip looked all right. Bally didn't look great. First Trust looked all right. IWMY just so, not really doing much for me. All right. YBIT caught a lot of upside and is the best performer on the chart. That's great to see. Look at USOY outperforming its parent asset. That's really good to see also. Now let's go to the triple threat sheet. I love this sheet. Okay, this shows you where you have a call spread. It shows you if the call spread is in the money, Most all of them have call spreads now, but if it's not on this sheet, it may mean they didn't have a call spread. Also, I forgot to download last night's trade. So this sheet is accurate as of yesterday afternoon. I'm sorry. But it's not only how far in the money the call spread is, it also is a conventional buffer report. So you can see TSMY, their call spread's in the money, which is great. And they caught about 3/4 of the upside. You can see, hell, JPMO, yeah, they're in the money too. You can barely see it, but the in the money ones are over here, and the out of the money is the dark line underneath. And the further out of the money, the bigger the line is. This one's about 30% out of the money. This one's about 13% out of the money. And these are slightly in the money, and you can't really see them. But these down here where the call spreads are helping out more in theory. AIYY looking really good, catching a lot of upside. We'd expect Crash to be up because Tesla is down, and Tesla is catching almost all the downside. You hate to see that. You definitely hate to see that. Now, look at Coney. Coney catching about 75% of the upside. Now, this is how it's designed to work. AMDY catching virtually all, 90% of the upside. Great job. Great job. If you guys have any questions, feel free to ask them. I'll check the comments in a second. Let's see what else we got going on. Tesla, yeah, I guess their self-driving thing was just a bust or something. You'd have to say the best looking ones on here is AIYY and AMDY. As far as if you value catching upside and, performing well. How do you guys like the new triple threat spreadsheet? I try to make it look so we don't have to go to the buffer report anymore. The two-tone orange is the old buffer report, and the little blue is how far out of the money the call spreads are. So let's look at the call spreads. So, like I say, this is as of yesterday. A lot of these expired today. You see the expiration date. I didn't even, no, you really don't. The ones that are 10/18, I did write 10/18 over here. So like this Misty one is a 10/18 expiration. So it's still open. Let's look at that one. That one's amazing. Even though it's 13% out of the money and it seems like it's way out of the money, just yesterday or the day before, Misty was way up here in the green and its call spread was in the money, but that's before they rolled out. So let's see here. Where is this trade here? Oh, that's expired. I called it something like YieldMax beast of a trade. Look, it's up around 36 million right now. These guys are just killing it. Okay, so I think they rolled from the 180-200 spread into the 220-240. I might have put the old spread in here. Let's look at, I'm going to look real quick while I got you guys here. It expired, and I'm going to look for MSTR, an expired MSTR. I put a lot of these in here. I thought I may have had that MSTR spread in here where we could see before they rolled where it was when it went into the money. But I've been following a bunch of them. So we'll follow a bunch more, or we'll follow more next week. But for right now, I'm going to follow this one right here. And maybe we'll add some, maybe AIYY and AMDY or something we should add. But this trade right here, let's zoom out a little bit. This trade right here is a beast. They have 1.3 million synthetics. It equals 1.3 million shares. They sold 13,700 options contracts. And then they bought 13,700 option contracts. The ones they sold for 360. The ones they bought for 60 cents. So in the old days, a covered call would have looked like this. It would have paid more. It would have paid 360 instead of 3. But this is your profit loss graph. So once it went up, over the covered call, then you're totally capped, right? And by the old days, I mean like maybe 2 months ago, that's the way it worked, right? Not anymore. Not thanks to Mr. Petrocelli. It's good to hear Jay weathered the storms all right in West Palm, man. They were gnarly yesterday. I finally watched some TV coverage of it today. Like I said, I saw some storms go through some parts of town that I could tell that's probably not where Jay lived, because I was seeing something. I was seeing it said West Palm on the TV, but it didn't look like part of town he'd be caught dead in. But then they started showing a tornado, and it was in a nice, with a nicer part of town. I was like, oh shit, that looks like somewhere where he might live. West Palm's a big place, but it's not like LA or Chicago or whatever. It's anyway. All right. So I was somewhat concerned, but yeah, he told me he was fine, which it was good to hear. That was good to hear. But anyway, these trades are awesome. What he's going to do with this one, I've showed it a million times. This is as time passes. This is the profit loss graph right now. This is the profit loss graph as time passes. That's Tuesday right there. As you get closer to expiration, which is next Friday, the ledge appears. The ledge is your give up. If you get stuck on the but especially at the back of the ledge, that's the worst place for you to be, relatively speaking. But what Jay does, and most people do on any income option trade, when they've earned about half their income, they roll, is what they usually do. So that has the effect of doing the same thing as I'm showing here. But when it's halfway to expiration, they're going to roll. But what that means is they're basically playing stock until they have hardly any give up in these with this strategy. Unlike in the old days when it was all give up, it was nothing but give up. Give up was all you had, So it's definitely pretty cool. But I really like how they've kind of engineered this. Before Jay was in options, he majored in engineering in college. This is financial engineering. This is financial derivative engineering, because you've engineered a way where you have less risk than you otherwise ought to. It's no free money, like I always say, but you definitely have less risk when you trade this way than somebody who's not trading this way. You have a little bit less risk and a little bit more income. But the person who's not trading this way will still have more NAV growth, usually overall. So, it just depends on what you want to do and what your goal is with your account and your risk tolerances. All right, let's see what you guys are up to. All right, what's up, Michael Johnson? Are you still in the Philippines? Yeah, hey, you're welcome very much. You're welcome. I appreciate it. I appreciate the compliment. Yeah, I believe you used to be in the Philippines, Michael, but I don't really remember. Well, I do remember. I think that's right. I bet that's right. Anyway, you're going to answer here in a second. Anyway, all right. Is there anything else I forgot to cover? I was just going to cover Max's volatility risk metric. Let's see what the market's doing real quick. Even if you two guys that are watching this aren't interested, maybe somebody that watches the recording is interested. So let me just give my little spiel here. So let's look at the market, and let's look at the daily market since it's Friday afternoon. And we'll just look at the daily bars. All right, and we're going to open the volatility report and see if it works. Or not the volatility report, Max's volatility metric. Oh shit, that's a big ugly line. I'm gonna take that off. Oh gosh, you got to be kidding! Oh no, it's still working. Okay, I thought it quit working. Okay, unfortunately, last Monday morning, the system went negative, and it's still negative, and it is not. I know it's not doing very well because the market's going up. So we'll keep an eye on it. The reason it's negative is because this is sloping up and over the 200-day moving average. So we're cautious, but usually when the market can go up at the same time as volatility, this is the VIX, this is volatility. The market and volatility can go up at the same time for a while, but then one of them wins out. It's usually the market, I think. But we'll see. We'll see. But whenever we see this start selling off like it did back here, so let's look at the difference between the volatility look nowadays with the doing this, and we'll compare it to the volatility look, say, on May 9th. All right, just for fun. Let's see. I need to scoot this in. Okay, so on May 9th, right here, whatever, you could see what volatility was under the 200-period moving average, this big red line, and closed under the Bollinger Bands. That's as strong of a sell signal as you can get. I mean, it's trending down, boom. So when volatility trends down, the market trends up. But then you didn't have to worry again until it popped back over the 200-period moving average, did we? Then it issued a sell. I don't have it on here but anyway, we should put it on there real quick. But then it issued a sell signal, and that was the best. That was a really good one. And it was early too. That was late July, and that got you in puts in plenty of time for that early August pullback. I told everyone when I saw that. I didn't show everyone why, and I didn't want to explain the volatility thing, why I thought it, but I told everyone that I did think it, and I think a few of you guys got puts anyway. All right, so that's it for volatility. So volatility is still cautious, saying look out below. What do you guys think about the market? Tell me what you guys think the market's going to do next week. Are you guys bullish or bearish? What do you think, Michael? What are you saying about the market? Yeah, VIX is going up, and when VIX is going up, it depends. When VIX is going up, it means the volatility in the market's going up. So for the high yield funds, it's actually good for the ones like Round Hill and Defiance that sell, and iSpy that sell volatility every day, because as volatility goes up, those ETFs make more money. So yes, if that's what you're talking about, yes, VIX going up is promising. When VIX goes up too much, like explodes, like just blows up, like doubles in one day, it generally means the market's crashed. So no, we aren't looking for that kind of stuff. However, a lot of people use VIX to kind of help time the market, and that's what I'm kind of teach you guys how to do. And so we look at VIX or volatility lately, and it's kind of been trending up lately, and it's above the so bad is good on the VIX. In other words, up is bad. Up is bad. This means the market's bearish. I know but when the VIX is selling off, that means they're buying. The reason that is because the VIX is a measure of volatility. Well, what volatility really measures, or one of the things it measures, in my opinion, is people, pros, but also just regular people putting hedges on. As people buy options like puts and stuff for protection, that makes the volatility, makes the VIX go up. So you can see right here, the reason the VIX started going up is because people were like, oh shit, the market's going to crash. We better buy some protection. And sure enough, the market crashed. Now that this system doesn't always give you warnings. Sometimes a crash will happen out of nowhere or whatever. The past couple of times it's given you like a week's warning. It's popped up and saying, oh shit, something's going on here. People are buying, or the past 4 or 5 times it's given a few days warning. But anyway, it's just one of many things I look at. I don't really believe the market's timeable. But I do think, like, what I use this for is, let's say I got my tax return back, and I was going to buy some T-SPY, which is probably what I should do from Tap Alpha. So let's say I was going to do that, but I wanted to do that kind of into a market pullback. Okay. So I could use this to kind of, we're in a market pullback, right? We're supposed to be in a market pullback according to my metrics. So I wouldn't be buying here because I'm still waiting for the market to pull back. But whenever the market's done pulling back and it switches from red to green, then I could, pick up my iPhone, sign into Tasty Trade, buy, 200 shares of T-SPY or whatever. T-SPY is a good fund. You guys should go watch my interview if you haven't. That's the second time that guy's been on. His name's Sai Katara. And I also have something fun that you guys might want to see. We'll look at, I'm going to see if you guys have any questions first. But if not, I'm going to talk. Hey, what's up, Retire? It's good to see you, bud. Very nice to see you. All right, well, let's talk, I think this, so let's talk politics. We're going to talk politics. I'm not going to be political though, but the reason volatility is elevated is because the election's coming up and the election's going to be a shit show. And that's not being political. It just is. It just, you can tell. Or let's just say this, people perceive that it's going to be a shit show, whether it is or not, volatility's up. So, what that means practically is maybe people that manage $10 billion have gone out there and bought hedges and have hedged out the downside. And if when big money does that, that'll drive the VIX up. And so that's probably what we're seeing. And that's why I'm looking for more downside, or I'm cautious. But that's kind of how the VIX works. Then after the election's over, after whenever they decide the coast is clear, they'll start selling just like they did back here. Last November 2nd was one of the best buy signals in the history of ever. I mean, you guys remember last November. If you're waiting to make like I say, I'll show you this. If you're waiting to make a purchase of stock or something and you're using my system, you wouldn't do it when the freaking VIX is blowing up. And the VIX blew up last October and September. And last October was a pretty vicious little, not really, but pretty quick, like 8% 3-day pullback. Well, no, actually like about a 2-week pullback. Last October was a decent sized pullback, I guess. But anyway, so that, that when it's up here, that tells you, hey, look out below. But then when it comes here, it tells you it's clear sailing. So let's turn the thing back on. I said I was through talking about this, but now I decided. But let's see what happened last November. Let's look at the overlay. There we go. Okay, so you could see now I have this one too small, but right here was just a great, clear sailing ahead signal for anything. I mean, because the SPY went from 418 to whatever. And even if you didn't think it was going to continue, that's the good thing about doing something like I do, about following something that's mechanical like this. Even if you didn't think it was going to continue, you just keep going until your rules-based system kicks in and throws it back to red. My system says 2 closes above the 200-day. And so that happened on April 4th of this year. But between November of last year, 23, and April of this year was an absolute face ripper. SPY 418 to freaking April 4th was like SPY 492. Went from 420 to 490. All right, it's a 70-point SPY ripper. And then, look out below. And sure enough, that was a good time. That was a good time to get out in April. That was a pretty quick little pullback. But then right there in May 3rd, all clear signal, and it did not get another signal all summer long. Well, until July 17th, and then it said sell. So like I say, I don't trust my own judgment. So that's why I use things like this also. So if you were timing an allocation May 3rd, May 6th, something like that, would have been another good time to hop in the market. That was around SPY 506. By the time I gave a counter signal, a signal the other way, the SPY was at 581. So that's why I talk about this every day. but that's great. So that's great, except right now it's still on red. It's still on red, but yet the SPY is just melting up. So right now, for all my great intentions and stuff, it's not working. And it turned red at 571, and now it's at 580. So you're underwater 10 points if you're playing this one. But in any event, I really don't think anyone is. But the way to play these is just be cautious when it's red, and then when it turns back to green, if you're planning on buying something, then that sometimes means it was a good place to buy. You know, not always, but I'd be interested to know, do you guys use any types of systems or whatever? I just don't trust my judgment. So I'm always using something in addition to my judgment. And the VIX is the volatility is a really good thing to use, but there's other things. Some people look at bonds, some people look at, at whatever. Man, I like that you guys are talking to each other. All right, I got a question here. Let's see. Max, can you name your top 3 option income ETFs? Yes, I can name. Thank you, Retire on Dividends. That's funny. You should say that. Let's see. My top 3 option income ETFs. Well, triple QY. Well, now I'm going to take it back. Triple QT. It's the same thing. I mean, but I just like one of those NASDAQ ones. Call it triple QY. Triple QY. For sure, because take all the income. That's the main one. But then the next one, for if you want to be a little bit more conservative, would be T-SPY. And I did the video on T-SPY today. You make 14% and get a lot, arguably a little bit, probably better total return than you get with triple QY. Although triple QY over the course of a year got, 13% total return or 12, 11%? I mean, anyway. That was last year. Who knows how they'll do next year, right? And then my third one, okay. The third one would be probably YieldMax. I mean, how could you go wrong with the whole YieldMax portfolio? I mean, yeah, they have some dogs in there, but last year's dogs may be next year's, winners. I mean, YieldMax is a great concept. And if you were trying to live off YieldMax and you couldn't afford to lose money, probably like a 70% allocation of YieldMax and maybe a 30% allocation of YQQQ. It'd be hard to beat. You could, I mean, it'd be hard to beat. Now, it's not a perfect hedge and it's not like free money, but that's what I would do if I was trying to live off it. I would combine YieldMax and YQQQ. And that would give me diversity, but also a little bit of safety. And I would do maybe 70-30, because you would mainly want to be in YieldMax because the market usually goes up. But that 30% allocation would really help when the market's pulling back, I think. That's me. I'd like to know what you guys think or whatever. Write them in the comments. Yeah, Curve, you're right. Curve doesn't get the respect Curve doesn't. I wanted to compare KQQQ, which is a great growth fund, but it only pays like 6 or 8%. I was going to start comparing it with T-SPY from Tap Alpha, but then I had the interview with the Tap Alpha guy, Cy, and he told me, no, we're paying 14 now. So, but there's nothing wrong with real steady funds that are designed for huge amounts of future upside. Nothing at all. And that's how I think KQQ is, T-SPY, and really, to be honest, JEPQ and JEPI and some of those are. But yeah, Curve probably doesn't get the respect they deserve. TSLP looks really good half the time. Isn't TSLP beating TSLY or something? Let's bring it up here. Let's do a little dividend channel calculator. Let's do a little TSLP versus TSLY. But really, YieldMax is hard to beat. Just hard to beat. I mean, and I'm not even a YieldMax guy. I never push their funds or whatever. But when they have like 30 funds almost, you get one of each of them. I mean, yeah, that's that to me, because you're making your own index. Now, if there's a tech wreck, you're going to be in trouble. I mean, don't put too much in it. But I mean, anyway, okay, so look at this. TSLP beating TSLY pretty handily, but more handily lately for some reason. Retire probably knows because he follows the exact option trades. Let's what's another one on here? Let's do NFLP versus InFly. All right, now InFly's, well, yeah, InFly's got it on that one. All right, what's another one? Goop versus GUI. Isn't Goop just killing them? Wasn't Goop just, I think I checked a while back and Goop was just murdering people. Look at that. Holy shit, Goop. All right, well, nice job. Let's see, Goop GUI. What are the others we have? Let's see, Aptly, and what's the counterpart to Aptly? I forgot. Gosh darn it, I didn't know Aptly, and I don't know the counterpart name though. It's Appy, right? Something like that. Gosh darn it. It's my job to know these things, and I just flat ass forgot. Well, let's do NVIDIA, NVDY. Somebody put it in the comments, please. Yeah, NVDY, and I forgot this one. So NVDY and NVDP, is that right? NVD, is that right, P? Gosh darn it. All right. But yes, Curve doesn't get the respect it deserves. Volume is low. People just love YieldMax, and it's you look at it. Okay, so Curve, they're doing the same thing. Curve uses monthly options. YieldMax uses weeklies. So whenever you go from monthly to weekly, you about double the yield. Whenever you go, maybe like 1.8 the yield, or 1.5 to 1.8 the yield. Whenever you go from weekly to daily, you 1.5 to 1.8 the yield. So that's why those monthly funds that earn, like on Curve, that earn, 20, you multiply 20 by 1.5 and you get 35. And then if they're on YieldMax, the Apple product might earn 30, but on Curve it might earn 15. But anyway, it keeps the same ratio. So Curve did up their distribution estimates. That's good. Old T-Spy manages distributions. That's kind of the new deal now, is to manage distributions. If you guys haven't seen that video, go watch it. That guy is also, he's not just paying dividend income. He's given out some money from the capital, from the upside, to get to that 14%, because he's selling options that are way far out of the money. Size selling options that are, I think, so far out of the money that he really makes about 6 to 8%. That's how much he makes. But he mentioned today that he's using, taking some of the upside they make. And I did not ask him, and I should have asked him. I have a bunch of questions. I'm going to follow up with some questions by email, but I should have asked him. There's a lot of questions I should have asked him. He also, don't forget, I was also going to say real quick, he said he might consider going to weeklies too, if you guys really wanted it. No, so I'm trying to think what I should have said. So I didn't ask him, is he actually selling? See, when you have a synthetic, as Rod knows, Rod's here, if you have a synthetic, as you know, you can do the synthetic bailout. As the price of the stock goes up, you trade some of your calls, some of your puts in, you realize some of your gain. So these guys actually own physical shares of the SPY. And so he's saying that they're also, cashing in part of their upside. So I didn't really think of it at the time. I just figured of synthetics. I figured, okay, but no, with shares, he'd have to be selling a few. So, so interesting. But so that's a whole new strategy. And I wonder if he's going to buy the shares back in a pullback. Is he doing the old, what's that called? Compound? I don't know. But I don't even know if that's the deal, but whatever that's called. You had Curve's expense ratio should be lower, you think, or YieldMax's expense ratio? Let's see what they're talking about. Let's see. Requires average investor to have capital, investor required to return. Well, yeah. Yeah, Curse. What's nice is there's a niche in here for everybody. If you're super conservative, it'd be hard to go wrong with T-Spy or KQQQ. I mean, I got Howard Chan on here. I'm a Curve guy. I like Curve just fine, but their other products just aren't as fun to cover as YieldMax, Okay. All right, Rod, I said thank you. But yeah, what are you guys going to do this weekend? I'm a college football fan, and I'm also a fan of Oklahoma. Big fan of Oklahoma, huge fan of my whole life since I was a little kid, born and bleed crimson and cream. But now I live in Austin now. And anyway, it's the weekend that Oklahoma and Texas play each other. Now they don't play in Austin or even in Norman; they play in Dallas. But I'm going to watch the game tomorrow and chill out. Then it's my birthday on Tuesday. But I'll probably celebrate all weekend. And of course, I don't drink. So if I celebrate, I mean, hang around and do nothing. But that's what I do anyway. Play my guitar, hang out with Jax, make videos. I have a really good video right now that I want to do for you guys, but I'm having a block on putting out. Like every time I try to put it out, something happens. But you're going to love it. So I'll try to get that finished this weekend. It's kind of a serious video. It's about asset allocation and, planning. It's not my usual just short, funny video or whatever. So I think you guys will like it. Yeah. Boomer Sooner. Heck yeah. Boomer Sooner. Heck yeah. Yeah. Texas is really good. I mean, I live down here, and like I say, I'm born Sooner guy, but I moved down here 7 years ago, and Texas was terrible. And we were great. We had Kyler Murray at the time. The year I moved down here, we went to Ohio State and beat them. We had Baker Mayfield. He went first round in the draft. Then we had Kyler Murray the next year. We were incredible when I moved down here. And I felt sorry for Texas, and I kind of got a soft spot for them and kind of became a little bit of a fan, or I'm sympathetic to their cause. And so I kind of started following them. And they went through a couple of coaches in the time I've been down here, or they're on their second coach. But the coach they hired is also a recovering alcoholic like me, and I really like him. He's a brash dude. His name's Sarkisian, but they call him Sark. He's badass. He's probably about my age, maybe a little younger, maybe about 50, and he used to coach at Alabama, and he's a stud. He coached at USC, but he got fired. He got so shit-faced, and he told an offensive joke or something to one of the donors. And the athletic director, he was so shit-canned, the athletic director wouldn't even let him on the plane. It would not let him on the plane to fly home. He had to get his own flight home, and he was fired the next day. So that was his famous kind of rock bottom. But that was 2014, and he was head coach at USC, or 2015, something like that. Anyway, he went to rehab evidently, and he's got his shit together, and he's doing great. So I like to see guys like that do great, right? All right, guys, I'm gonna let you go. I just think it's fun talking about my weekend, but I appreciate you guys for being here, and I hope you guys have a good weekend. And if you need to get a hold of me, I'll be on Facebook. I have a Facebook. I have a Discord. I don't really have a Discord, but you can find me at Discord, Facebook, or even Reddit. I have a Reddit now. All right, guys. Or even maxconvexity@gmail.com. All right, guys. You have a great day. I'll see you later.